Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. So obviously we haven't got any breakthrough on this week. Actually, we've got the inside candles in all higher time frames. On the weekly, we've got inside week. On the monthly chart, we've got inside month. So no impact on the big picture, which is probably obvious in the current situation, because globally market needs a new long-term booster. But it could come only when the United States starts forming its new foreign policy. And obviously it will be only after Donald Trump will become the president. So until this moment, we probably could get some sideways action with more or less significant breakouts or something, but hardly it will go out of this range that we have here already in place. So nominally we have bearish context. On the weekly chart, the trend also stands bearish. On the daily chart, you could see that MACD also point to the downside. We haven't got the grabber on Friday that we discussed, and I would suggest that this might be very important in the current situation. But as you can see, MACD still stands very close to the price, and probably we could get it within the 2 sessions until the new year as well. At the same time, the existence of this triangle and pennant, which is actually even looks better on the weekly chart, suggests that some bullish background might be existing here. And it might be the sign of the bullish dynamic pressure, because actually with this retracement that we have, market hits only the nearest standing fib support and stuck there, start forming the pennant. And classical pennant is upside continuation pattern. So this keeps us aside for a while from the actually long-term bearish forecasts, since they are not quite obvious. And as a fundamental analysis shows that we prepared today as well, currently we have enough bullish factors on the fundamental background that actually could support gold even in the nearest few months, starting in the new year and lasting in January and February. So the problem on the debt sale, the Donald Trump improvement on the president post, which has to happen in the Congress and which has some nuances that we have discussed in today's report, all this stuff could bring some nervousness on the market. Here we even do not speak about some geopolitical issues or something. Even domestic United States problems might be enough to keep market in tension and doesn't let to collapse it totally. At the same time, we're in a very short-term perspective. Let's take a look at what we have. Overall price action is not really impressive, right? So it looks a bit heavy. Potentially we haven't got the grabber, but it might be formed still. If you take a look at the yields, they are not stopping. The 10-year yield keep climbing, which is making some pressure on the gold as well. And finally, even nominal context right now stands bearish. So we have bearish MACD here, we have bearish MACD on the weekly chart, and actually we have bearish MACD on all other market on intraday charts as well. From that standpoint of view, by all rules, by all meaning, we do not have any rights to consider long positions. So we could consider either shorts or just sit in the hands when the situation will change. That's at least following by the Jordan Napoli tactics. So on the fall time frame chart, you could see that Friday setup that we discussed is done well. Here it hits the confidence that we have said, and take a look on starting some bounce. So recall what we said about the bullish positions right there. If you still have taken it or decided to take on Monday's morning, although they contradict the overall context that we have, be careful. And as soon as you will take this position, try to move stops to the break-even as soon as possible. Because reaction on this confidence might be very short-term and very small. So this potential trade has very small nearest standing target. So that's you should keep in mind. And this because it goes against major tendency. It's control trend potential trade, and it's well, actually not in a row with the overall context. That's why we said that this is not our general scenario. We do not intend to recommend to buy here. But at the same time, as you rely on the strength of this level, you could try to make the speculative trade if you trade especially on a very low time frame, such as a 15-minute chart, for example. Theoretically, it is possible. Speaking about bearish position, what we could say on the hourly chart, market is forming some kind of the flag consolidation. If we will get the bounce as reaction on the come from somewhere to the 2630, that might be just great. So potentially 2630 seems interesting for a possible position taking on the bearish side, especially if we will get some bearish grabber on the daily chart in a few days. This will be just perfect. But honestly speaking, guys, both of these positions are not very attractive, honestly speaking. Why? Because you do not have some strong pattern or something that could minimize your risks. And you could take a look at it and say, yes, this is a great pattern. There's probably really great chances that we will get the bounce. For example, like here. So here we have great gutters triple to sell, minor wash and rinse, and that was the signal that the 30% pullback, well, has good chance to happen because this minimum target of the free drive as a triple two. Here, unfortunately, we do not have anything of this kind. So if you plan the trade here and consider some bearish position taken, of course, we will clarify this in the updates if this will appear, but trying to get something on your back if you would like to. So if you consider taking short, if we'll get something like guarded triple to sell, that will be at least something that we could rely on. Well, it's always better to have some pattern on your back when you're planning the trade. If we will get something like this one, through the fast action right here, it would be better to not do anything, to do nothing. So, and this is what we have currently on the market. Obviously, currently we have the Christmas time, New Year's days come, so nobody would like to do something really with big volumes, and well, a lot of traders are just taking a rest. That leads to this kind of the behavior in the market. So we have no options but just wobbling inside of this range and trying to catch some minor patterns, minor stops that might be formed through the week. So that currently the conclusion that we could make here.